All right, everybody, buckle up. It's going to be a big one today. Look at the NASDAQ composite. Big move to the downside, retaking these previous lows here during the Russian-Ukraine conflict. Cracked those lows. A lot of people were calling for the bottom, got completely reversed. Periods of consolidation were very, very minimal. It was basically straight up and straight down. I will be building the case out for a potential bounce here in the very near future, especially that we just undercut these lows. Look, I'm going to also talk about some things that I'm seeing out on the YouTube space platform that I'm, hearing various influencers talk about. And I just want to, preface this entire video to be very careful, obviously, in these times. If you're new here, welcome to the show. My name is Michael Silva. This is the Stock Market Brief Show. We use technical analysis and intramarket analysis to get a good idea as to where the market might be headed next. Let's go ahead and just hop right into today's episode. All right, everybody, we're going to hop right in. As we already know, Google is reporting earnings. It's a big earnings week. Well, Google came all the way down to its weekly expected move, earnings expected move, I should say, and basically tagged it, and we're starting to see that bounce there after hours. This is going to be some key things to watch out for going into the remainder of the week, which we still have Wednesday, Thursday, Friday left. If you take a look at Google on the daily time frame, it did crack a big level. That was at 2,500, and we saw some significant selling. So possible back test to reconfirm that this support level, boom, 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 is now going to hold as resistance, maybe in the cards, as the upper risk range this week is right at about that 2,500 at 2,580. Another one to watch out is Microsoft. Microsoft is actually ripping to the upper expected move for the earnings here in the after-hour session. We will see if that continues to hold. And then Tesla was a big one today, down 12.18%. This is wicked, and it was a big red flag. Red flag, I'll draw it out. Red flag was right here on earnings. You saw the big gap up, all right, the big gap up, and we started posting on Twitter saying that looks like a big lower high. And the reason why is because it reversed and basically closed at the low of the day, which led me to believe even though it was good earnings, the big players took that opportunity to sell into the liquidity, and now we're seeing a massive move to the downside. We'll see if this 975 gets retested, right? It came down and consolidated. Big, huge break on some big volume. Very dangerous area to be in right now overall in the markets. Now, if we take a look at the heat map of today, clearly it was red across the board, some big moves to the downside on the big mega cap stocks. And then if you take a look at year-to-date performance on the heat map, you're starting to see some pretty significant pullbacks, right? So, or I'd say corrections. Even some stocks moving into bear market territory. Microsoft is down around almost 20%. Facebook is down, I think it was like 40 something plus, potentially even more. I can't remember the exact number. Netflix is down 67%, Google 17, Amazon 17, Tesla down 17%. These are all year-to-date numbers. So, and Nvidia too, 36% down. Absolutely incredible stuff. Probably scaring quite a bit of investors, getting out of positions. So we will, like I said, build the case out for a bounce. And then I'll get into what I'm kind of seeing out there on YouTube. Let's take a look at the 11 sectors that make up the S&P 500, then we'll get into everything else. First and foremost, you can see defensive posturing up the top of the list, and then at the bottom of the list are the three horsemen: financials, technology, consumer discretionary. When those are down, you're going to see this take place in the markets, right? This was a very, very big aggressive day to the downside. All right, so now we're going to get into some volatility index. So first and foremost, this has been on a monster rip, and we can see the negative divergence right here that is currently building. The last 30-minute candle closed just above that 33.50. We'll see if we can get this gap filled. If the gap gets filled on a negative divergence, I think it could take a little bit of a breather here. Now, this is what I'm starting to see, and this is what I want everyone to pay really close attention to. You need to be very careful, obviously, when the VIX is shooting north to, around 40. But it's not just the VIX, the S&P 500 volatility index here. You can look at NASDAQ volatility. It is pushing 40, right? When we could see Russell volatility, it is also pushing that 40 level there too. This is not an area to be aggressive. And what I typically see in times like this is you see out on YouTube and various other platforms that people are trying to just be so precise and call the bottoms to catch big rip ups to the top. And there's nothing wrong with doing that, but you got to understand that you're sitting in an area where volatility across the board is rather elevated. So it's all about protecting capital. And if you want to take shots at the market during times where market volatility is like Mavericks, not even Mavericks, this is Nazir Portugal, I think I pronounced that right, where the waves were even bigger. Be very, 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 very careful here. I will say that it does look like we can very well get a bounce in the near future. Potentially even for the remainder of the week. Things are setting up in very overextended areas, but you got to be very protective of your capital. These are not times where you want to just go all in. And if you do, you just need to make sure that you're managing risk, right? So I wanted to point out here on the advanced decline line, every single time it gets that below that 2250, we have seen some markets bounces, some rallies take place, and we're right there again. It can extend obviously lower, but just be mindful that, hey, we did reach down to an overextended area on the advanced decline line. You typically see bounces there, and then if you look at all the BP charts, they're still continuing to move down into that overextended territory. That's the BP NDX. The BP SPX has moved closer to that overextended territory. BP composite also in that overextended territory. Not only that, but we have things like energy sector, the BP chart extended territory, and then also financials moving into overextended territory as well. But there's even another layer to all of this that's taking place of why I think that there's actually the remainder of the week, there's less reward to the downside than there is to the upside, meaning that if you short right here, it's probably not the greatest idea given the context of these charts. However, to play a bounce does somewhat make sense. You got to be very careful regardless, but I'll point that out. First and foremost, this chart right here has been an excellent indicator. We talked about this really way back when it hits a minus 300 reading, and also the NYSE, the summation index, is below zero. We've seen turbulent times, and those are the blue vertical lines, right? Bam, bam. And we compared this most likely to 2018, late 2018, how we saw it hit here, and then we came up, we came down, we came up, we came down, we came up, and then we crashed really severely down. And what you're seeing here is very similar type price action. I don't know if we're going to see another leg up and then another move down or whatever the case is. I'm not trying to predict that. But what I will point out here is the NYSE is still well below zero. And nothing really good happens when the NYSE is just trending below zero. We actually talked about it when the parabolic SAR started upticking. And now you're starting to see why I said that that was an important thing to watch here in the markets, okay? Now, I want to hop into why I think that there may be the case for a bounce. So first and foremost, you need to be somewhat patient here. You need to watch for undercuts of previous lows. Sometimes when you get undercuts of previous lows, which we're all getting a full back test here, and then it flushes out stop losses, gets out remaining positions, and you could sometimes see bounces from that area where you can get just monster bear market rallies. We've seen bear market rallies like that. Not saying that we're going to get one exactly like this, but it is setting itself up that if we do undercut the lows, it can start ripping back up here too as well. But just be mindful that, the market's already been on a severe sell-off. Now it's starting, now it's either if you shorted into this, you got to look for profits, or you got to be very, very tactical if you're looking to, it really depends if you're a short-term, medium-term, or long-term trader, the idea of what to do here in these specific times. Clearly the trend is down, but that doesn't mean we can't see monster moves to the upside, okay? Now, what I want to call out here is this is the Qs, but if we actually look at the NQ, all right, it did undercut the previous lows, and we're starting to see it move up after hours. So this is the type of action that I'm talking about, where if it undercuts the lows and you might start seeing a bounce, which gives the opportunity to play for a potential rally, and then, you got to be aggressive on taking profits because those things can get very well reversed given the context of the chart. Okay, now another thing to call out is if we dig even deeper into the Qs, we talk about weekly risk ranges. Look at where the Qs came after hours. It is down there at around 311. There's 311.88. That is the lower level for the weekly expected move. Many times have I seen it just doodle around in this area. However, now if you're shorting into the hole right here, there's clearly less reward to the downside than there could be potentially for, as we're overextended in many different charts, a move to the upside. So that is why I'm saying right now, if you're out of the markets and you're in cash, that's also not a bad bet, right? As the market's been in very turbulent times, you want to see volatility contract, all right? And then you want to just, You want to just be patient, right? Sit on the sidelines, be patient, and see what takes place. But if you are a tactical trader, what I'm trying to point out right now is that the reward is more to the upside than there is reward to the downside, which I think is very clear given these overextended signal charts, and also that we're already at the weekly risk range, the lower level here. Okay, not to say that it can't break down through lower, but I'm just pointing out some things that I'm noticing. If you take a look at the SPY also down huge, 2.9%, 3 big huge days, right? So this right here was a very bullish candle, and it got gapped down and reversed itself completely. So it looked like it could set up for a bounce, but the market said, nope, not going to take place right now. We're going to move closer to that weekly lower expected move. And guess what happened after hours? After hours, we basically tagged it, right? 413 down to the low, and we're starting to move from that level right there, telling me that, hey, this can obviously get retested and we can doodle around here. And if you get way outside of it, we're going to have more selling into selling, creating even more of just a craziness in the markets. But in my opinion, as it stands right now, either you're sitting on the sidelines or you're trying to tactically play it to the upside as far as a stock market bounce goes. Let's now go hop into crypto. I want to first hop into the Saylor to Schiff tool. Look at this. We'll get into the daily time frame here soon, but we're still on that sell signal. Good thing that we, paid attention to it, right? Where the market, it faked us out. It was like, oh, it's going, and then it all of a sudden is selling back off. Let's look at the daily time frame here of Bitcoin. All right, everybody, we are at the ftx.us website. They sponsor this show. They support my channel. If you don't know who ftx.us is, go to their website, check it out. You can trade with up to 85% lower fees than the competitors. If you haven't got an account set up, it's easy to do so. If we're looking at the daily time frame right now on Bitcoin, look at nothing could hold it down, right? We talked about that yesterday. It was a big, huge sell-off. It moved all the way back up. Talk about just insane volatility here. I'm going to zoom in. Just look at that. Craziness, right? So we fake out type candle, we reverse right there on itself with even more volume. And this is looking more and more like a bear flag as it stands right now. Just be very careful here. We're still on the sell signal. We look like we're having that bullish crossover. Now we're not. Once again, it looks like it's still heading down. Can that change? That can obviously change. I don't see a setup yet. Currently, just looking at this chart, other than potentially the short end of things. So, if you trade crypto equities, you might be able to look into some shorting of those. I talked about that on Twitter, where you can potentially go into like MicroStrategy, right, is one of them, or GBTC. There's various other crypto equities that look good to short into when you get those sell signals. But also keep in mind, like, shorting in this market can be crazy, right? You can get some big ripping rallies that can rip your face off. So you got to be careful. But as it stands right now, we're cracking down through these levels. It looked good yesterday. Back to poor today. What can you do other than just be patient and wait for things to start contracting? All right, everybody, that is pretty much all I got for you on today's episode. So I want to wrap this up, okay? We talk about the weekly expected moves. The S&P 500, the Qs, and even the IWM are at the lower range, telling me that, hey, if it gets way outside of it, there's going to be more selling into selling that can cause the markets to really start to fall. However, we're getting overextended readings to the downside on many signal charts that I shared with you. Being that volatility is so high, we're starting to see a negative divergence on the VIX. We could very well see a pop or a bounce in the markets, but you need to be very tactical. Sentiment right now in the markets is all over the place. I'm starting to see many YouTubers start to lose their minds. Not necessarily really, but you got to understand, this is what happens when volatility indexes are above these ranges. We talked about it here. We talk about it every time that it comes up into these levels. People are trying to predict. People are trying to do everything that they can to be the next Michael Burry and be the next great short or the big short or the big long or whatever. And you got to understand, it's like this Hollywood effect, and it makes them want to call out certain things and get very aggressive with it, and it could very well convince a lot of people. And that same thing goes with me with what I talk about in the markets too. I'm just trying to look at the charts and interpret them in a bullish and bearish case and give you as much as an unbiased view as possible. As it stands right now, it's either one, on the sidelines, or two, try to be tactical on a bounce, but be very careful, being that the volatility indexes are so high. Okay, that's all I got for you on today's episode, everybody. Hope you have a wonderful night.